Good morning, team. This is your members weekend video for June 10th. I am going to go through the market as swiftly as possible, and then I'm going to go through a shortened version of the scan list. You can tell where the market is, it's kind of humming, and we're basically in a power trend here, if you could tell. Um, we're above all these lines, and we kind of like staggered nicely here. Um, we get 451 stocks in our scans. When the market is crappy, we get a couple hundred or even less than a couple hundred. So this kind of tells you also a reading on where the market is stuck, because you got more stocks setting up, and more stocks behaving well to kind of meet our criteria for the scan and getting the scan. So I'm going to go through maybe like 10 or 12 or 15 of them on these. And then I also want to go through a little bit of the flag list, the ones that we've gone through previously. I just kind of do a little recon to see like where we're at, if you know uh, kind of like just study, go back and okay, hindsight 2020. Let's see, what we said we're gonna buy at this particular junction where we breaks this trend line, and see where how we would have done. Just to kind of have an idea, kind of study time. I hope you guys are doing that on your own to go back and study and review the previous alerts and so forth to see how that would have worked out, so you can know what to look for going forward. So before further ado, so here's the Nasdaq, right? So the Nasdaq is definitely humming along. Um, if you look at the weekly, we're a little bit extended from the 10-week moving average. We kind of crossed a little bit over this previous top here. We kind of peeking our head. On the daily, we're holding that 9 EMA nicely. We're building a nice little shelf here. It would not be surprising, guys. It would not be surprised if we kind of come back a little bit and get back to the 21. We are a little bit extended here. When we do get a little bit extended from that 21, if you notice in this area here, we kind of come back to it a little bit. Um, even when we had this nice little rally here, we go all the way here. Once we get a little bit extended, we come a little bit further back, a little bit extended, a little bit further back, a lot extended. Well, here like a little bit extended, a little further back. Here we're kind of getting up there, getting in nosebleed. Also, we have a lot of stocks setting up. So there's a lot of positiveness, and a lot of everybody's like, okay, the market's doing good, let's invest. That's when you start taking the pedal off, your foot off the pedal, because once this becomes really obvious that we're in a bull market, or where the market is performing to the upside, that's kind of the timing that the reversal usually happens. So um, we could also keep climbing that wall of worry and continue higher. But I would not be surprised if we have a little bit of a pullback. Um, Let me show you here on this chart here of the SPY. If you notice, we're way above the 21 here on this squeeze. And if you notice, we had a squeeze, guys. Let me see if we can get this going here. Uh, okay, see, we had a squeeze right there. All this right here was a squeeze. Let me see, get this a little bit further down. Yeah, there you go. So that's better. Um, right there. Notice that's a squeeze, right? And then when we fired, you know, officially on this day right there. That's the first green dot that we fired. Now we had the little green dots on the bars. Like I keep telling you, I'm ready to go. I'm ready to go. I'm ready to go. And boom. So whenever you get those green dots, I'm ready to go. I'm ready to go. I'm ready to go. That's when it's about ready to go. So we are on 1, 2, 3, 4. We're in 5 days of a fired squeeze, right? but we're already getting the slowing down momentum bars on the actual bar, the early warning. So this kind of coincides with, um, we might get a pullback back to the 21. And also, I kind of noticed this. Um, I kind of noticed this, guys. Let me, okay. If you notice back here, when we fired on this squeeze right here, right? This was the day that it fired, and then it went as high as right here, right? So this was around, let's say 416. Here's 1, 2, 3, 4, 5, 6, 7, 8, 9. We had 10 bars, 10 bars of a of when we hit from the fired to when we hit the top, right? From 416, we went all the way back down again to somewhere around, let's say 4 or 5. So that's about 11 points, right? That's about 110 points on the S&P. It's 110 points, right? So where are we here in the top? We hit 432. Let me get back over here. Where was this high? This high was 431.99. 431.99. So let's say 432. So 432 minus 11 is 421. Where's 421? Somewhere around the 21-day moving average. How do like you can't make this stuff up. So a regular pullback, normal, nothing strange, nothing really bad with the market. A regular pullback of 110 points, even 90 points, somewhere around here, it's going to take us back to the 21. Back to the mean, reversion back to the mean. So let me clean this up. And if we notice here where we're at on the extreme levels, sorry for this delay. Okay, here we go. If we notice here, where are we on the extreme levels? Right here, 3 ATR. See, you're right at 3 ATR. So reversion back to the mean would take us back to like 40, 4,200 and 10, 40 to 10 around there. There's your 110 points, somewhere around there. Let me put the see and these channels here, right? Kind of take us back to the middle here. Sorry, put the SPY. So see, there you go. Where are the extremes here? The last time we were this far back, we were somewhere back here. That's what I was telling you. We had this squeeze here, right? And then we fired, and then we're in the extremes. We come back to the middle. That 420 range would not be unlikely. Okay. Just kind of want to show you that. Let me see if you go a lower time frame. If you go to the hourly we hit the 3 ATR back here in that extreme and the high of the day, and then we kind of came back down to the mean from there on the hourly. So you here when we extended, we come back to the mean. 30-minute, way over, and nope, in the 30-minute we just right back to that mean. We're 429.90, 429.8. Look at this. Look at these dots that I had here previously. This is at 430. This is like around 429.87. We're 429.90. So these things matter. So if we are to break, see how we kind of broke and we came right back in? If we are to break this right here, if we break that 429, I'm actually going to put an alert right there. I actually want to, yeah, I'm going to put an alert right there. Right, if we are to break this right here, because this is the top here, bottom here, bottom. If we had to break this, we might go down to the 428.5 maybe. And if we break that, we might even go a little further down to these levels down here, that 426 level. Again, this is in the 30-minute, and then we can kind of isolate a little bit. So just want to give you a perspective from a bird's eye view, um, the overall market. The Qs are even further extended. The Nasdaq. I don't know why. I think I'm still a little bit too slow today. Um, if you notice, this is way extended. We had a fire squeeze back here. See? Look at the green dots. I'm ready to go. I'm ready to go. I'm ready to go. Boom. So whenever you guys don't see this because you don't have the Pro. You have the regular one. You should really invest in the Pro. It kind of gives you early warning. You can look how much money you could have made here. I'm ready to go. I'm ready to go. 326, 353. That's 30. That's 300 points on the Nasdaq. You could have made money on by just investing a couple grand on this. All right. So again, a pullback to 21 would not be unlikely. We're definitely momentum is slowing down. If you notice, um, we already have the slowing down of the momentum. We went from light blue to dark blue, so that means we're slowing down. We got the blue bars. We got this little indecision bars where we have like kind of like spinning tops kind of thing where like we kind of go up and down and we end up somewhere in the middle there. This is indecision. We had a lot of these lately, so it would not be unlikely to have a pullback, especially next week when we have a lot of financial data coming out and the Fed meeting, the Fed report, the minutes on the interest rate hike or no hike or on wording and stuff like that. So there's gonna be a little volatility next week, a lot more than lately. We've been really um, low vol for a good part of the month. Look at the VIX. I mean, the VIX is like trading at like lows from back, from back, back in December of a couple of years ago. So even when it was, back here in the 19 range, boom, we hung around here for a little bit, and then, but this took about 2 weeks. So we've been kind of going down. We got a fire squeeze on the well. I mean, this really doesn't really. And the squeeze on the VIX is kind of different because the VIX is kind of moves around in a world of its own. Doesn't have like a rhyme or reason to it. Just overall volatility. So um, basically, we've been in doldrums and just kind of climbing that wall of worry higher. So we went from as high as 20 to as low as 13 and a half or so. So getting back to somewhere in the 15, 16 range wouldn't be surprising next week if we have anticipation of the Fed, or even if the Fed says something that the market doesn't like or spooky or something. Even within Powell speaking or so forth, or the minutes, we might get some volatility next week. We shall see. So back to what I was doing here. Let me take this off. Okay, so we're extended here. The markets are extended. We were making really good money. I gave you like I think like 6 or 7 trades last week that all were profitable. I hope you guys took at least 1 or 2 of those. So let's go through maybe like 15, 20 stocks really quick on the scan list that I'm giving you guys, and then let's go through the flag list to kind of study a little bit to see how things how things look, and kind of have a perspective on when we have these patterns set up. Um, do they actually, would they actually would have made us money, and does this make us money? So let me first one. Well, I mean, here you go. This is one that we had the line right there, if you notice, and that worked out. That definitely would have been, you write this 21, this 9, sorry. Boom, look at that. Guys, you would have bought this at what, 38? You're almost 42 and a half. Um, that's a nice move. So obviously, I also have this one here to kind of get that pull back to kind of, back to the 50-21 kind of thing. We have a little flat top here, building up. It's gonna ASML. Now then a little pennant This one right here, kind of building up. Might actually put one right there. So this is just going nowhere. This one I have a little trend line here to kind of get me back, a pull back to the 21. This is a little bit extended already. The entry would have been that 108, 109 area. This kind of took off already. Just like back here, the entry would have been 94, 95, and you're at 111. This is a little bit extended already. I mean, everything is pretty much a little bit extended. Um, there's a little flat, a little going sideways here. I want to buy this on a pullback to the 21. I'm looking at pullback buys now because everything is it's kind of so extended. I need a little pullback buy to kind of take off from here with my stop, the 21 or the 9 or so. Here's my, that would have been the entry right there. Elf. I gave you Elf. That gave us good money, but Elf was kind of setting up again. Okay, so little flat top right there, and actually, let me uh, let me put a little. I'm gonna either buy it at the breakout. I'm gonna buy it at the pullback, and have the 21 be my buy in the sand or below 100. Uh, See this one kind of get back to the 9, broke out and came back to the 9. You still would have been in this stock. Something's going on here. Maybe a little bit aggressive if you put that as your entry, but I wouldn't do that. 156.20 would have been your entry. 158, that worked. Let's go through a few more. FTNT, make money on this one. I gave you guys this one. I'm going to reactivate the bottom one for a pullback buy to the 50 again. If it comes back inside, if it breaks out above 70, 69.5 or so, that's another entry you could take. All right, let me see if we go. See, pull back to the 21. Boom. Look at that. Nice little power trend. Broke it. 21 held. So that would be kind of your entry right there. Um, that one did its thing. Oh, this would have been a nice one right there. Boom. Nvidia just a monster, right? So I have this trend line here. I'm waiting for a pullback to the 21. This is way extended. Don't chase this. This has to either consolidate, go sideways for a little bit, build a base, and then if you build a base, then you buy the breakout. If it comes back a little bit and hangs around the 21, you got a little cup action, little handle, and then look at this. This is strong, guys. I have no idea what this is. Look at this. That's why these scans work. Because you guys, look at these numbers. Look at this, guys. Wow. You would have bought it right there somewhere around, 12 and a half or so. You're 18 and a half. Look at this. Look at this move. This is incredible. That would have given you another entry right there. Build something like this here. See that? Here, a little entry here, and then maybe like my stop is right there. Actually, let me, yeah. I mean, this is strong. This is a strong stock. See how the 9 held here? Boom, boom, boom. That one worked. Okay, I'm gonna go through like 5 more. Little base right there. That one worked. This one is that the entry would have been right there, at 80. You're almost 85 and a half. Worked there. Waiting for that pullback. Actually, this wouldn't be a bad cheat entry if you buy here and this little breakout, this little flat base here, and you have your 21 as your stop out. Two more. Let me see if I can find. Oh, here we go. Like this. Okay. Look at how nicely it holds the nine right there. So let's see if I can put something like this here. So I'm either buying it at the breakout from this little base right here, or if it has a little pullback, I'll meet the 21, and then my entry is the bounce off the 21 with the 21 as a stop. All right. Um, okay, that's it. Now let's go through the flag list. These are the ones that we can. Ah, I should have flagged all those we have new entries on. Oh well. These are the ones that we flagged, 126 stocks that we had actual like actionable trend lines on. Let's just go through like maybe like 15 real quick to kind of see. Um, that would have made you some money. That would have made you some money. That would have made you some money. That definitely would have made you a lot of money. That would have stopped you out, and you would have lost a little bit of money. That would have made you some money. That would have probably stopped you out and lost you a little bit of money, and then you kind of get back in right there. But it's Google, so you know what? This is a re-entry. This is yeah, kind of back and forth. You wouldn't have really gotten stopped out or anything. So I'm gonna reactivate this. But that would have made you money right there on this one. That would have been a second entry. That would have made you some money. You still in this? Well, this is not hasn't triggered yet. Boom. That definitely would have made you some money. Here's the boom. That would have made you money. So you see a theme here? This trend line things, these little, base forming and kind of when it breaks out, that would definitely would have made you a lot of money. That would have been another re-entry. You still would have been in it. This works, right? This one right here, you would have gotten in and you would have gotten stopped out. This one would have been a loser for sure, 100%. But again, you get in at 40, let's say 40.05, and you get out at 38. You lost a couple bucks. You got 200 shares, you lose 400 bucks. How much you would have made in all the other previous like 15 that we saw that would have made your money? You would have made like at least 4 or 5 grand. This one just going sideways. It's just continuing to build that base. So this is more like a nice pullback buy to the 21. Starbucks is just not performing. So we have our entries, and if we get this at a cup here, that would have made you a little bit of money, and then you would have kind of get stopped out and just maybe even broke flat or made a little bit. I'm still in, I have shares in QSR. I bought it on this re-entry right here. So once we came back inside yesterday, I mean outside the line, I bought. So I'm in this stock right now, and I'm profitable on it. When we still, this is breaking down below the 50, so I'm going to do here. I got my trend line, so if you ever decide to come back around, then you're a buyer. Wendy's, right there, boom, that would have made some money. This is still this trigger, but it's kind of going nowhere. I had the one on the bottom here. Boom, that would have made you some money. You bought it at 49, 48 and a half. You have a dollar something. Nice little flat base that kind of worked, and your nine will be the line in the sand. CPA, just have it here. Like I said, it's extended. Um, that would have been the entry nest right there. Oh, we have the trend line here waiting for that breakout. A chart that definitely would have made you some money. Clack, that would have made you some money. We're waiting here nicely here on this one. So nice little break. I would say right there will be a nice entry. That would have made you some nice money. You bought it at 40, 46 and a half or so, 42, 44, 46. So 46.50 or so. You're up about $3.50, $4. That would have been nice here. You would have probably would have held it in the, on the 50, and then you would have bought it at somewhere around here. You're up maybe like $3 or $4. It's kind of setting up again. That would have made you some nice money right there, and then your re-entry would have made you more money. So I mean, I would say 95% of, let's say 90% of all these things that we go through every week, um, would have made you some good money. Look at that, boom, like 21, holding it. This one kind of came back inside, 21, holding it. That worked. When you go through 5 or 6 more, look at this, nice. And if you guys notice, the ones that do not work, you have minimal, like, okay, this one didn't work, right? You bought it here at 60.10 and you're at 59, so you're down $1. Oh, well, you probably would have gotten out somewhere around 59.5 or so. Let's say you're still holding it because you're holding, let me clean this up a little bit. Let's say you're still holding it because the 9 hasn't been violated. Okay, so you're still holding it. So you're down, let's say like 90 cents. Okay, but all the other ones you have winners on were $3 plus, $2 plus, $4 plus. So again, we're not trying to be perfect here. We're trying to make money. So if you have this nice your sale rules, in this particular one, the 9 would definitely be, because also we had this little shelf right here. So if he violates that, then I'm out. So let's say 58.80. So $1.50 or so. I'm risking $1.50 to probably make about 3 or 4. That's my 3 to 1. I can live with that. Look at that. Boom. You bought this at let's say 340. You're up 16 points, guys. 341, 342, right? Because this is the entry right there, 339.37. So you bought it at 342. You're up 12 points. You have 100 shares, or even if you buy an option, the option would definitely have been up at least $800, $900, and you were risking maybe what, like here, like 4 points. You're risking 400, and you're probably up about $900 already. And then now you have a raise stop at 349, and change is your stop out. So you have a guaranteed winner. This one right here, it's kind of going sideways. You got in, so maybe you're down like 10, 15 cents, and then maybe at the 21, it's kind of like you're lying in the sand. This one right there, look at that, boom. You would have bought it at 60, you're up 5 points. Here's what I'm saying. You're up 5 points, and the other ones you're down 90 cents. So if you have enough instances where you take enough trades, again, I don't want you to have 20 stocks in your portfolio, but depending, if you have a 10% position, so whatever your portfolio has, let's say at the most you're going to have 6, 7 stocks. That's a lot. I think maybe I have 10, 12 at the most, but let's say you have 4, 5, 6, 7, and you have a 10 to a 15% position on each one, and like 2 of them don't work, and you're down like in between those two $1,000, and the other like 3 or 4 work, and you're up like $5 or $6, there's your 3 to 1. And then you do that. You kind of rinse, wash, repeat, rinse, wash, repeat. This was a nice one right there. You bought it at 60, you're at 65, and then the 9 maybe would have stopped you out, or 21. This trend line right there. So this one right here is kind of going flat. You got in, you're still holding the 21 is holding it. So I'm gonna put a little trend line right there in the 21 to give me an alert. I'm gonna go through like 3 or 4 more. DT, that's a winner. That's a winner. You gave a lot back on Friday, but maybe you would have taken some profits. Shop right there, boom. You're an entry. You kind of stuck consolidating. That's a nice winner. Look at that. Boom, the 9. Let's say you would have bought that little peak out right there, right? And then the next day, oh shoot, I'm down. But the nine held. See, it closed above the 9. And if you would have kept it, the 9 held. The 9 held. It closed above it. So you got in right here. Let's say at 48, you're at 51.5. you're already up 3.5 points. And then your stop would have been somewhere here about 46.5. So, $1.50 and you're already up 350. There's your 3 to 1. All right, so this is just flat. This is not going anywhere. I'm gonna kind of take this off. This is not doing anything. Um, Waiting for this breakout to kind of like give me a little bit of entry. Same thing here. Same thing here. Look at that. Boom. You would have gotten in somewhere around 120. You're 12 points up. Right there. You got it in at 81.5 or 82. You're up. And it's really hasn't done it. If you notice, this hasn't done anything, and you're already up a couple hundred dollars if you're on 100 shares. All right, 3 or 4 more. Uh, this one kind of, if you got in, the 21 is holding, so that's working. Boom, nice right there. All right, guys, if you notice, overwhelmingly, there's a lot more winners and things that and stocks that worked. Why? Because our inventory it's the cream of the crop. These are the best stocks in the market on a weekly basis, um, and then they're setting up technically in a pattern that's easily recognizable. You have a little flat base, you have a little cup, you have a consolidation, you have a squeeze. All these things give you the edge. So once you see that, we do a trend line, we have put it in a watch list, we have an alert in the trend line, and then once we get alerted, we take action, we put a stop in an area that we know that, okay, if it violates this to the downside, then this setup it did not work. This concept it failed. And then that could be the 9, that could be a 21, that could be that little basing pattern where, like, they say you would have bought it, let's say in this one, you would enter right there, 100% that would have been my stop, which in this case would have been the 50, if anything. And if your stop kind of coincides with like multiple other, like, um, obvious like areas, like a 21 day moving average, like a 50, a consolidation pattern, okay, like let's say back here in this one, just to give you an example. Let's say you would have bought it there. I'm kind of noticing a little, like, shelf right there. So in this case, the 21 is kind of like my stop out. So if you would have entered it right there, let's say at 290, right? I'm out right there at 300. So I went as high as 343. So I'm definitely taking profit somewhere in the 330 range, right? So that's kind of how you do this. You take this entry, and then where's your stop? The stop would have been the 9. So I would have gotten that right there. 323, 348. This scenario. Boom. You get in right there at 348. And then in this case, my stop is a 9. So in this scenario, I have a break even stop as it is already. So I have a guaranteed winner. But I probably would have taken a little bit of profits on Friday, knowing the market is extended. I would have taken 25% off, so I have a guaranteed winner. So that's kind of how you guys would think, okay? You got to take it stock by stock, but go through the list. Go through the list. This list I'm giving you are the best stocks. Don't look to buy stocks. Look to buy the setup. Now within that, you're looking at your inventory to be the best stocks. This is what I give you. And then within that, we go through all this once a week, where we identify our entry point. Once we have the entry point triggered, you take the entry. And then you stop is what I just told you, either a consolidation area breakdown, a particular moving average breakdown, and then that's it. And then you have your first and second target, which is that 127 flip extension or 1.68 extension. And that's it. It really is that simple. I mean, it really is that simple. This particular thing here, okay, 156.19, right? That's your top. So what's your entry? 156.20. Well, this stock hasn't done anything. This is like the most boring thing. It didn't do anything, and you're up a couple points. And then your 9 is your 9, or the line is back. It's your stop out. Um, just that simple. Coco, right there. That would have been your entry. You're still in the stock at the 9. I mean, it just you look at that. This little low cheat entry right there. You would have bought it right there, 82. You're at 88. Even this second entry right there, you would have bought it right there. You're still up a little bit. I mean, look at this. Boom, right? You kind of back down again to the entry. So even if things don't work, you don't lose money, and you lose very, very, very little. Ah, look at this. This is nice right there. Boom, 48, 51. Last one. Okay, 138.59. So let's say you would have bought it right there. You would have gotten stopped out. You lost 2 points. You got back in right there. You got your 2 points back. There you go. All right, guys. Trading is simple. Put the work in. You can make some money doing this. Okay? Let me let me put it in a little, not different manner, but let me kind of restate it. So you kind of like, we have the best stocks. This is the list that I gave you. Now within that, we look for a pattern. We don't look for stocks to trade. We look for a pattern. If the stock is great, like an Nvidia, AMD, Tesla, Apple, all these are in the scans if they are performing. So you will have them, okay? So we have the inventory. Within the inventory, now you're looking for your setup. You're looking for your edge, a basing pattern, right? Something like this. You have a little basing pattern. You have a little cup action. You have a low cheat entry. You have a basing pattern, okay? You have a cup with handle. You have the squeeze. You look for these patterns, and then you draw your trend line where, okay, if this happens, then I'll do this. And so if the trigger, if it breaks that, your entry point, you get in. And then you stop, you identify it, either be a moving average or back below a trend line or back below a previous support level if it breaks out. So in this particular case, you would have bought it at 126. You definitely would have taken some profit at 140. And then you kind of in this stock all the way up to like back to 140 again. You would definitely taking some profits at 150 up here. So I mean this would have this would have made your month. This stock would have made your month from 125 to 150, 25 points. You got a couple hundred shares. That's 5 grand. That's not a nice. That's a nice week, month, or whatever it was. This would have been from late Jan to mid Feb. So in 3.5 weeks, a month, you would have made 5 grand. Simple pattern, recognition, take action. All right, guys, be good. Put the work in.